Hello there, welcome back to grade 11 accounting. In this video, we want to look at the question paper of June 2022. In this question, we are going to look at the preparation of trade and other receivables. And this is question 3 on that question paper. And the question reads, you are provided with information from the financial reports of Smarter Stores, the business owned by Mr. Sims Makers, who sells basic groceries in his local town. So all the required part says prepared following notes to the balance sheet on 20 February 2022. That is 3.1.1. For the case of this video, we are only going to look at part 3.1.1, which requires us to prepare trade and other receivables, which is 8 months. So we go to our answer section, you see that we have a note there of trade and other receivables that is already given. So we are just going to enter figures in that trade and other receivables note. So this is a trade and receivable notes that we have, and we've got net traders as pre-entered, and then we've got trade traders as pre-entered also. So what it means is we have first of all to calculate the net traders, trade traders figure. So before that, beneath that we have to calculate the net trade traders figure. So we're going to start by entering the trade debtors figure. So we go to the question to try to check the figure of trade debtors that we have. So if you come back there at the beginning of the question, you see that we are given the figure for debtors control, is 73,600. And then we look in additional information. If you've got anything that is affecting debtors control, if you come to the next page, you will see that we have got something that is affecting our debtors, that is item 4. So on item 4, it reads an EFT made to a creditor for 1,800 settlement of account of 2,000 rands was in collected posted to the debit side of the debtors control account. The applicable discount is correctly recorded. So what it means in this case we have 2,000. This which was the total amount, but only 1,800 was paid or received. So what it means is if we say 2,000 minus 1,800, we are going to get 200 as a discount. So it means this 200 was correctly recorded as it is stated here. So we are only concerned about this 1,800 that we have here. So 1,800 was debited to the debtors control by mistake when it was supposed to be debited to the creditors control. So what it means is we are supposed to credit debtors control so that we remove within the debtors control and then post it to the creditors control and debit it there correctly. So by crediting in the debtors control, it means we are subtracting. Remember, debtors control is an asset account. So remember, all asset accounts, whenever we debit them, and whenever we credit them, we subtract. So in this case, we're crediting it so that we remove it from the debit side of debtors control. So by crediting, we're going to subtract. So we're going to subtract 1,800 from the total figure for data that we are given there for data control to 73,600. So we're just going to adjust it as such in the other section. So if you come here, you could see that we're just going to summarize the working year in brackets by saying 73,600. And then you subtract your 1,800. And after subtracting, you obviously are going to get your 71,800. So here we've got 71,800. So this is what we have. Oh, so sorry, I think we are entering in the wrong column. You can just maybe I put it down there, summarize it with line with trade data. So remember, beneath this, we are trying to calculate the figure for net trade data. So in brackets here, we are saying 73,600, and then you subtract your 1,800. So after subtracting, you're supposed to get your 71,800. So this is what we have. So beneath that again, remember we also look for the figure for provision for bad debts. The figure for provision for bad debts also is supposed to be subtracted the figure for trade data so that we can arrive at the net trade data figure. So we are also going to look at a provision for bad debts in the question. But if you come at the beginning of the question, you'll see that we already have a already calculated figure for provision for bad debts. Remember, in some questions, you can only be given as a percentage, and you need to calculate the percentage in proportion with the total amount of data that we have there in the question, and then we get the balance for provision for bad debts. But in this case, we are given it as already calculated as 2,900. So this is the figure that we have for provision for bad debts. And remember, the total figure for provision for bad debts for that current year should be subtracted from the figure for debtors control so that you arrive at the figure for trade debtors control. So we are going to pick this 2,900 and subtract it there in the trade receivables note. So if you come here, we are now saying provision for bad debts. Provision for bad debts. And the amount that we have for provision for bad debts is 2,900. So we are saying 2,900 and we are subtracting. So if you subtract now, separate 1,800 minus 2,900, you will now arrive with the figure for net trade debtors. So the figure for net trade debtors there, it's after subtracting, you're going to get 68,900. So you are saying 68,900. And then from there, we are going to look at other receivables. We're going to look at other receivables that will be the question, other receivables that we can have. We can have prepayment of expenses, we can have accruals of incomes, and then and any other income that can be in the question. So if we can go there and try to look for other receivables that we are given in the question. So, but if you come here at the beginning of the question, you see already we have got prepayment of expenses. Prepayment of an expense is in other income. And also we have accrued income also is part of other receivables. So prepayment of expenses, we've got 1,000. Let's try to see prepaid expense. We've got 1,908. And then I will check in the additional information if we've got any other prepaid expenses. So we are going down to check if we've got any other prepaid expenses. If you go here, telephone account for February 2022 was received, but it's not been paid, which is 1,300. So it means this is an accrual since it hasn't been paid. So it's an accrual of an expense which is supposed to be under trade and other payable. So we leave that one. And then we go to the next one. Mr. Snakers paid 14,560 at the end of February. So the insurance premium for the month of February and March. So you see that there is a prepayment that is there. If you come here, you'll see that our year is ending on 28th February 2022. But this one was money that was paid for February and March, of which March is out of the our financial period. Our financial period is ending on 20th February, which means that the one that was paid for March becomes a prepayment. Remember, a prepayment is money that has been paid for the next financial period. So March is inside the next financial period, so it becomes a prepayment. But remember, this 14,260 is for 2 months, which is February and March. So you need to see what was the monthly payment there. So to see the monthly payment, we are just going to say 14,560. Then we divide by 2 to find the monthly payment. So if you divide by 2 there, you see that we're going to get 7,280. So this 7,280 now is related to March. It means February it was 7,280, March also it was 7,280. So to remove the prepayment of 7,280, we are just going to pick this 7,280 and add it to the prepaid expense that we are given in the list of balance of 1,980. In other words, we are saying 1,980 plus 7,280 to get the total for prepaid expense. So I will go there with the other section and just summarize them. So here we are now saying prepaid expenses. Prepaid expenses, and what we are going to do, we're just going to get 1,980. 1,980, we add it to 7,280. Then the total that we are going to get there is 9,260. And obviously on the next one, we are now going to look for accrued income. It's also part of trade and other receivables, accrued income. So we check at the beginning of the question, you would see that we have got an accrued income there. You'd see that we don't have So we can just try to see what we have. But we if you come at the first item, saying commission income due to the business is 4,000. So this is an accrued income. Whenever it's due, it also refers to it as accrued. So a commission income is an income. So this is an example of accrued income that we have. So we've got 12,000 that we need to adjust there. So it means we are going there again and try to enter that one as our accrued income. But obviously, before you enter that 12,000, you also need to go through all the additional information to see if you enter the accrued income. But if you go through additional information, you see that we don't have any other accrued income that we are given in the present. So if we don't have, just check that one that we are given at the beginning of the year. It's enter it as a total accrued income. So if you come here now, we are saying accrued income. And the amount that we have is 4,000. And obviously now to get the total for trades and other receivables, total is supposed to come here. This is now going to be the total. We are now seeing figure for debt debtors that we have is 68,900. Then we are going to add the figure for prepaid expenses, which is 9,460. And then we add also accrued income, which is 4,000. Then we get the total figure here. Remember, these are two we are adjusting to get the figure for debt debtors. Remember, 67,800 and 2,900 to get the debt debtors. Net debtors figure, which is 68,900. So we're not going to put them in the calculation for total. So we say 8,900 plus 9,260 plus 12,000, then you get your 90,160. So this is what we have in terms of the trade and other receivables, not according to this video. Remember, the trade and other receivables not is for 8 months. So thank you for listening. Meet again in the next video. This for this video. I'm signing out.